Hi everyone, and welcome to Trader Talk Radio for today, the 11th of September 2022. My name is Paul Botchwell. I'm the founder of Actions to Wealth, and joining me today, we're going to have Alexis coming in and talking fundamentals, Lloyd in doing currency strength, and we're going to have Gordon coming in with a market overview as well. So lots coming in the next sort of 20 minutes, so do hang in, watch the stream, and if you're watching the recordings, watch all parts. It's going to be good stuff. Now, we are starting off today with Alexis on fundamentals. Is that right? Alexis on fundamentals. Hi, Alexis. No.
Hi. Yeah, it's me first, so I'll just get started straight away. Okay, so no problem. So coincidentally, probably we're going to look at the pound a little bit, but I guess not so much about the passing of the Queen, even though I think it's a change of an era. But more importantly, this is the news that actually I think caught my attention from a fundamental perspective. So Liz Truss is the new leader coming in to the UK, which is kind of good news. Supposed to give a bit of stability to the pound, but she unveils a 150 billion UK energy plan. And what this means is, the UK is injecting a huge chunk of money into the market to kind of help the households support the cost of energy, right? So typically, a typical household in UK pays about £2,500 a year for the energy bill, and what this means is they're going to use a chunk of this money to subsidize. So vulnerable UK households will start receiving about £1,200 of support, in installments over the year. And for those households, they are not on like gas and electricity contracts, for example, they're also planning to kind of help these people, fund the gas, their gas bills. So what we're looking at a injection of funds from somewhere coming into the UK, and it is in a way of increasing its liquidity of the pounds in the market. So while if we look at just have a quick look at the pound index, while I know it's very difficult to trade at such low levels of the pound, but based on its numbers and the situation, I also find it very difficult to buy the pound currently based on inflation. It's very high inflation numbers. GDP wise, it's not exactly doing very fantastically as well. So this is a little bit of a review over here. So this is a bit of comparison. So inflation is 10.10 as of the last reading. We are expecting a new reading pretty soon. It's got negative inflation. Its interest rates, it hasn't quite gone up yet. Now, the euro, I think what is interesting is the Canada has increased its interest rates to 3.25. Euro has made a big jump, increased its interest rates all the way to 1.25%. So I think in the interest of controlling inflation, the countries are starting to be a bit more aggressive towards it. But on the UK stance, I do expect them to revisit the interest rate one more time, in view that, its counterparts are also increasing. But what is more concerning to me, I guess, would be this 150 billion UK energy plan, because this injection of money, as always, injection of liquidity into any currency market will kind of increase the supply in a sense, and it will kind of drag down the pound on a whole. So two things that are not favorable for the pound is the expected injection of liquidity, and number two, its inflation statistics are still the highest comparatively across the economies. So while from a technical perspective, it is a bit hard to stomach continuing shorting the pound at this end. I don't see any aggressive buying of the pound coming in as a potential. I do feel that on a technical perspective, we will see a little bit of support over here. I think this is a weekly time frame for the currency index. You can see a little bit of support coming into this, but I will be more inclined to look for more potential shorts. But just be a little bit patient and wait for the retracements. So if we do revisit the rest of the pound pairs, I think the pound pairs I'm looking at, pound cat will be one. Okay, pound cat has a very nice run for the last 2-3 weeks. For those of you who are on the Sunday night show with me, we have been writing this down. I think it is a weak this week is to be a little bit cautious, wait for those retracements before we continue shorting. Pound Swiss will be another pair that I will be interested in looking. All right, because the Swiss statistics, is still pretty good. The Swiss still has a positive GDP. Its interest rate is one of the lowest. It's still minus 0.25%. It's got low unemployment at 2%, controlled inflation at 3.5%. So I think the Swiss as a currency is still holding steady. And if we look at the Swiss as a risk-off currency as well, it will mean that the Swiss does have some demand or strength in its potential move. So definitely looking for more opportunities on the pound Swiss. It might be a little bit overextended. Again, overextension just means we just need to be a bit patient, wait for those pullbacks before we continue on its journey. So until there's a bit more clarity coming out from the UK, I still see a potential softness in the UK market despite the technical overextension. So I think my fundamental view for next week is looking for potential re-entries into the short pound. The Canadian dollar and the Swiss would still be my number 2 picks of a upside in terms of upside movements. I think Canadian dollar a little bit more interesting is we are coming into the Q3 of the winter months. There is a lot of potential for oil prices to slowly start moving up because we are entering the winter months. The war between Ukraine and Russia it's not quite over yet. And the more interesting thing would be that I think this would be a couple of warning signals coming out. All right, this is published September 9th. So there are talks about Euro trying to cap the energy prices on Russian side, which is not, they're not too pleased about it. So I do feel there is going to be a potential increase in energy prices even more, if these sanctions still continue. So I think the new talk of the town this season will be energy. We have the UK unleashing a 40 billion package in energy support. We have Europe trying to cap energy prices on Russia, and I think on top of that, I think Russia also kind of shut down its Nord Stream pipeline. All right, on the pretext they need to do some maintenance on it, but I think it's in response or in retaliation to all this so-called price war is going up. So as usual, the sensitivity of the commodity price currencies would be the Canadian dollar, followed closely by Australia and the Kiwi. So we will see a little bit of move over that for the next couple of weeks, because I think the war is starting on the energy oil side, and the oil prices has come off quite a little bit. So we're going to look at over here. Oil prices has come off a little bit, and if you guys notice, this price point, all right, is finding a little bit of support to the pre-war period. So this blue line I have here, February 24th, is where the start of the Ukraine-Russia war, right? So we had this whole price fluctuations, and it has come down almost on par to the pre-Ukraine-Russia period. So I feel that this will be a very good point for oil to start finding its footing again, and we will see a little bit more strength coming up once this support level is kind of played out. So that's my take for the next week, is an eye on the Canadian and commodity currencies, Canadian, Australia, New Zealand, and the weakness in the pound. I mean, unfortunately, the pound still has the weakest statistics among the whole bunch, and I think my favorite will be the Swiss at the moment, based off its risk-off currency status, as well as its general statistics still look pretty healthy. And that's all for me this week. Over to you, Paul.
Cheers, Alexis. Thank you. Good. Julian is going to be, Julian, who works in energy, is going to be busy, isn't he? That's going to be a busy sector this year if it keeps going like that, right?
Yes.
Do you know the UK energy package, Alexis? Do you know if it's just capping power bills? Is that also setting up some, some homegrown power sources that are not reliant on overseas power?
I mean, technically speaking, the UK's imports doesn't really, they don't really import that much energy from Russia. But because world prices, when they increase, that's the reason in the first place for the increase in prices. So actually, UK only relies about 3% from Russia itself. But because of market prices in general, I think it's a business world. That's the main reason why prices has increased for that. Yeah.
All the in the UK homes, you have a lot of radiator heating and not much heat pumps.
Yeah.
because it's cold, not warm. So I'm interested to see if we see a move towards heat pumps and more efficient heating, and whether the UK decides to see if they can grow some of their own electricity. In the next 5 or 10 years. It seems having having more power can't be a bad thing for any country. I know New Zealand's got to look at doing something similar. Thanks for that, Lexi. So we're looking to be patient and pick our moments. We're looking for pound short.
Yep, definitely.
Rightio, thank you very much for that. Right, Lloyd, currency strength analysis. Are you tending to agree with Alexis? Do you think the pound at the moment is a bit weak? What's your analysis on the currency strength?
I think it's going to be a difficult week for trading. Simply because I think the technical is sort of disagreeing with fundamentals. Now, I'm not saying that I'm right, but it's really kind of tough for the moment. Now, the first thing of all, we would like to look at the Kiwi. The New Zealand index. You can see that price essentially has already made a double bottom and it's really bouncing off the $60 level. Now, what we can see from here is that in the past it did break and then it came back up. I'm on a weekly time frame, by the way, so it came back within a month or two. So for the Kiwi currency index, suspect that price, overall this is a downtrend, no doubt. But so price might be actually retracing back to a level before it continues its downtrend for a time being. So we may be able to make some money off this move. Now, a lot of the other index are actually showing pretty similar move. You can see that they're all bouncing off of pretty good levels. For whatever reason, I'm not too sure yet, but anyway, that's not what I'm really keen to know. So again, the Euro index price, you can see that, again, similar double bottom. And in fact, just the past 2 weeks, it has shown some conviction that it might want to actually break down. So this week, I think some news came up. Price might actually be trying to retrace back up to a horizontal level before finding itself some footing. Now, one of the clearest signal of all is actually yen, but at the same time, I do recognize that yen is very fundamentally induced at the moment. So you can see that price is actually bouncing on at $70. Don't think we have seen this level in the past. Yeah, so we are really in no man's land at the moment. Now, as always, when there's a gap, my first suspicion from the past till now is that price will actually attempt to close a gap. And moreover, now we have 2 gaps going on. Yeah. So price might be trying its best to actually close the gap before going on its dominant direction. Yeah. So for all the long opportunity that we have this week, it might be just confined to this week and next week. That's all it is. Yeah. Because dominant direction, we don't see any sort of really clear-cut consolidation followed by a break to the upside or any kind of really strong reversal movement. Yeah. So we are all, just to be clear, we are all still in the downtrend for the above 3 currencies that I have talked about. It's just that technically on a level, they might be bouncing off. Then you can see that pound display very, very similar movement to Euro and Kiwi. Broad picture, we can see a double bottom and then with a very, very strong reversal price actions. Against big, we can still clearly see that it's on a downtrend. So it might be due for just a short-term retracement before continue on this dominant direction. So this is where the lower time frame traders might have some opportunities to make money. Now the Aussie, I've actually placed it in the middle. It's really in no man's land. Again, double bottom. You can see that price. Now this time I'm going to choose my words. Slowly moving downwards. At a quick glance, you can see that it's downtrend. It's moving downwards, but I can't really classify it as a very, very strong downtrend. Yeah, so I'd rather not trade the Aussie index at the moment. Now Swiss. Now this is an interesting picture. You can see that price again double bottom, higher low, again another double bottom. So it might be really making its best attempt to actually retrace back up. Now, if I zoom out all the way, what happened with Swiss is that you can see that it actually rests very comfortably between $110 and $100. Of course, we can spikes all over the place, but majority of the time, price is within this level. Now, I'm not really inclined to trade Swiss at the moment. If you can clearly draw a range boundary and price is right in the middle, personally, I think that's one of the worst place to trade. Unless it's really at the extreme, then it will be in a good place to trade. So I'd rather leave Swiss out of my trading opportunity for the next 2 weeks. Now, CAD is interesting. Downtrend. Fluctuate for quite a fair bit of time. Finally broke in the past. It did broke a bit. Came back up, second attempt. So what I suspect is that price might actually retrace back to this horizontal level. You can see that it's being tested several times in the past. And then continue its dominant movement downwards. That's what I hope to see. Again, I'm using the word hope because I'm also hoping that Canadian dollar will drop so that my electrical bills will drop. I don't know how that reflects, but technically this is what I'm looking at. And the last on my list will be the dollar index. Yeah. So again, this will be a much more of an opportunistic movement. You can see that price, really strong upward movement, no doubt, no challenge. And then we can see that it imprints a really nice bearish high test bar, since that price might actually be rejecting off this movement, of this level, come back down a bit before resuming. So now, to be very clear, my message for this week is, for the lower time frame traders, if you want to make money on some short-term retracement, we do have the opportunities. Otherwise, wait for price to resume its dominant movements. Yeah. So if you can't play retracement entry, wait for the proper setup for a trend entry. Yeah. So that will be my message this week. Over to you, Paul.
Cheers, Lloyd. Thank you very much for that, mate. Much appreciated. Interesting counter strength at the moment. A lot of stuff a little bit overextended. Just this market just needs to just settle a little bit to create some really good entries for us. Next up, we're going to have the video from Gordon Scott. Sam, you able to play Gordon's video, please?
Hello, traders. Hope everybody's ready for a big week. There isn't a lot of news in the U.S. market this week, but that doesn't mean we're not going to see big moves throughout the course of the week. I think we're going to see a lot of fluctuation and a lot of opportunity for shorter term traders, 4-hour traders and 1-hour traders to really catch some big swings, both in the Forex market as well as the US stock market. And it's all based on what's going to happen in the US stock market. It's because there are many members of the Fed that are going to speak this week. They're scheduled speaking engagements, but they are not Fed meetings or policy decision statements or minutes or any of that stuff. It's none of the normal stuff that moves the markets. It's just the Fed guys talking. And here's the thing. Right now, everybody is expecting the Fed to raise interest rates by 3/4 of a point. So throughout this week, everyone's going to be parsing every letter of the speeches given by the various Fed directors that will speak, including Jerome Powell, at some point in the upcoming week. And as they do, their opinion on whether or not it'll be a 3/4 point rate hike or it'll be a 1/2 point rate hike will vary back and forth, and that will move the market up and down rapidly. So it's an excellent opportunity to set price targets and take your profits once they hit a certain point. I don't think it's a good week to play big, long trending, unless, of course, you're making trades based on a daily or weekly chart where you're sitting back and letting the trends fluctuate and run if they will. I believe that the 5-day forecast is bullish for the U.S. stock market. And that means it is bullish for the euro and bearish for the US dollar. Let me show you from 3 different charts why I believe that's true. We're going to start with the S&P 500. I'm using SPY right here. And as you can see, we're making a significantly higher low. The second higher low and the first, significant one. We've got the lowest point put in back there in late June. And then you've got the more recent one that happened in the middle of July. And then you've got this one here that just occurred this past week. And so this series of higher lows also being, coincident with a series of higher highs says that the U.S. stock market is in an upward trend. Real simple. You just want to follow the trend. The trend right now is bullish. And most important of all, we had a gap day on Friday. What should have been a quiet day without a lot of news, the U.S. markets turned that into a big buying rally, starting with a gap up, and then it went higher and closed near the high. Days like this create about a 60% probability that the S&P 500 will end higher 20 days later than it closed on this day. So the odds tilt in the favor of continuing this bullish trend. Okay, that's chart number 1. To corroborate that, we need to get some sort of idea of whether or not people are improving or gaining an appetite for risk. We've been in a bear market in the US stock market for the past 6 months. Are we really ready to come out of that? In order to believe that, you'd have to believe that the US market was going to be filled with people who were willing to take on risk. Lo and behold, we have the Bitcoin chart. Bitcoin really suffered, came down strongly, but ever since that same point where the US stock market bottomed out, it has held a floor. And just in the past 3 days, it really lifted off that floor, trading in around 2,100. At the time of this recording, Bitcoin is the only live market, and it's not giving up its gains. So do we have an interest in taking on more risk? Yes, we do. Not a huge interest, but at least some, which is what you would have to see in order to believe that the stock market was likely to continue trending higher. A clearer indication, though, would come from the Aussie yen pair, AUD-JPY pair. What is this? Why is this important? Well, because the Aussie compared to the yen is the interest rate differential. Nowadays, it's even the US yen, but I want to use a non-US dollar pair. And this is the next closest thing. The interest rate differential allows large-scale investors to make money in the overnight carry of the Aussie yen. And so here it is. You have the Aussie yen breaking new highs. This is a good indicator of global risk appetite. Globally, not just in the US, people are willing to take on at least a little more risk, and that is evidenced by the fact that you see Aussie rising against the yen. And then, last of all, let's look specifically at the euro and the USD. Now, the USD, the dollar, has been gaining a lot of strength because people know that the Fed is going to be raising interest rates, and they have been. And as interest rates increase, of course, that makes holding US dollars a lot more attractive because you get the overnight carry interest being paid to you. And so let's look at the chart. Usually, you look at the euro USD, right? But let's flip that. Let's look at the USD euro, and you'll see something that I think is really important. And that is, this is the trend of the dollar against the euro, which, that's 60% of any index is the euro-US relationship. So the dollar is what it is most often in relation to the euro. Anyway, here we have this general trend upward. So now we're looking for evidence of whether or not this trend is continuing or weakening. If in fact it's continuing, then what you would expect to see is that the stock market should go down along with any other US dollar denominated pair. If the US dollar were continuing to strengthen and this trend were continuing to go up, that's what you'd expect. All those other things, all the things you buy with dollars to weaken. If the dollar weakens, then those trends reverse. So if the US stock market is going to be going up, it often will imply that the dollar is weakening in its trend and is about to go down, which of course means that the euro is about to go up, right? And therefore all euro denominated pairs would move similarly. Now, right here, I've just drawn these arcs, and it sort of helps you see what the dynamic of this trend has been so far. The US dollar, is making these moves that are the same time. These, I don't know if you can tell it, but these arcs are exactly the same shape. I drew this one, and then I just copied it forward twice. So it's surprising how the time frame of that first arc is mirrored in that second one. But look at how it compares in this third arc. Here we have this price failing to sort of hold up with it. Now, it's true that both of this one, the first time it didn't really go anywhere and then it shot up. The second time it ran up, came back down, and then shot up again. But in both of those early moves right there, we're already well past that period of time. We've already had the up move and we're heading back down. Yes, it could turn around and head back up. But see, it's already made these two significant peaks and is coming down and has taken out the low before it. That hasn't really happened before. I mean, you get something kind of like this, but you see how much stronger that looks. Or how about this one? It comes back down and it drifts, but it's like this is once, and it never comes back and challenges that low after making a peak. So instead here, we come up, we get this peak, we make another peak, and then once we take out the low, we trend down a little lower. So this thing here, we've made a higher high, it's true, but we've now gone and made a lower low. So I think that this is weakening, and I think the chances of it getting back up to the top of the arc and sort of completing this dynamic are decreased. What that means is you've got fewer and fewer people that feel like they want to be buying and holding US dollars. That's the key. The 3/4 of a point move that the Fed is expected to make is already priced in. And therefore, through the coming week, as the idea changes about whether it's a 3/4 move or a half point move, then you'll see this fluctuate. And once, see, if they're not going to keep it at 3/4, if they're not going to keep raising and raising interest rates, then the US dollar is going to peak and curl backward. And if in fact the Fed says, oh, you know what, we can't kill inflation. We've got to, we can't kill the economy. We're trying to get rid of inflation, but we can't kill the economy in the process. So we got to back off a little bit, and we're going to back off to just half a point instead of 3/4. If they were to do a thing like that, the US dollar would drop significantly because the 3/4 point is already priced in. And so I think that we could see throughout this week an inkling that somehow the dollar is topped, and that will add tailwind to both the euro and the euro pairs and the US stock market. So that's the outlook for the coming 5 days, and hope that is useful to you. Everyone take care and trade well.
Always, always fascinating to have a look at Gordon's take on markets. Technically, he is incredibly good. I'll be keeping a really close eye on this Bitcoin chart at the moment. It is fascinating. It's, Bitcoin loves to do this. It's an interesting place. It's at a confluence level. It's testing monthly pivot and what was a broken support trend line now being tested as resistance. And there's a little bit of stuff around this level. It'll be really interesting to see. I think it's weekly resistance 3 as well. So if this level holds, I think Bitcoin probably looks pretty solid. Be heading back up again. And if Bitcoin reverses here, if I got a selling bail on Monday, I'd be pretty keen to be short on Tuesday. So interested in the area and where one goes at the moment. I think most of them go. So it'll be interesting to see how Monday does play out as we get into it. Thanks for joining us today. We appreciate your company. Remember, with your trading, stay calm and make good decisions. It's not how often you trade, it's how well you trade. Have a good week. We'll be back next Sunday to see you then. Thanks, everyone. See you.